I mean, with Lightning, you still have to transact with the layer one to open and close channels, to move funds in and out of Lightning. And it's not like we're going to move all Bitcoin into Lightning and then no one's ever going to, go touch the layer one again. The ways that those two interact and like the long-term experience of them will evolve. It's not a valid kind of criticism, I think, to think that Lightning is going to really, really harm miners ultimately, because it only helps them. And it gives users also the same way of transacting in these new categories, as well as when the chain's really congested, they can still get their smaller payments in there.
Guys, welcome back to another show. Today I'm here with Graham, which is CEO at Voltage. How are you doing today?
I'm doing great. How are you doing?
I'm doing fantastic. I love our ping pong off camera, so those are my favorite moments, just for you and me, right? Thank you for the good chat. But for those people that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Yeah, absolutely. Yeah, so my name's Graham. I'm founder and CEO of Voltage, and Voltage is a Bitcoin Lightning infrastructure provider. So we help companies incorporate Bitcoin, most specifically the Lightning Network, into their products and services. Before I started the company, I was doing a lot of software engineering early into the Bitcoin space and did a lot of Bitcoin development as a hobby, just in kind of my free time, developing out projects, helping with Bitcoin Core, that kind of thing. And every time I started a project, it was really hard. You had to start from ground zero. You had to like build up a Bitcoin node or a Lightning node. You had to create all these channels. You got to do all this stuff. And it was just a big, big hurdle to even start working on a project to incorporate Bitcoin into it. And so I wish that I had like a provider. I can just have an API, just hit the API and start, sending payments, doing all the stuff. And that really just didn't exist at the time. And so that was the first kind of idea I had for Voltage, is create a provider that is a really simple, easy way to integrate Bitcoin and Lightning into what you're doing without having to hire a team of people that are experts in Bitcoin, without having to stand up all of the infrastructure, do all of these things that are inherently just really hard and would prevent the adoption of Bitcoin and Lightning ultimately from more companies. And so that's what we kind of set out to create. Now our platform is, we have customers all over the world, being able to just really simply hit an API and have that instant, experience of adding in Lightning into your products and services. So really excited for what we're doing. I think Lightning is in a really great spot, which we're going to dive into today. And I'm just excited to continue to help move the adoption of Bitcoin as a means of payment into the world.
Fantastic. I'm so excited you're here today, because sometimes, it comes out with my guests and some of the guests are saying, oh, Bitcoin is not Lightning. They're different things. And is Bitcoin really scalable?
Yeah, I mean, I think ultimately it depends on kind of what Bitcoin is very unique for a couple reasons. And that one, it's really the first kind of money that exists that is both a good store value and a good means of transacting, a means of payment, medium of exchange. You think about other alternatives, like gold is like a decent store of value, not very good on the transaction side. Paying with gold, just no one does that today. Similarly, fiat, really bad store value, but it's easier to transact with in a day-to-day basis. Bitcoin is the first one that is actually a good store value and a good medium of exchange. And so kind of catching people off guard and like, well, which one is it? How can you use both of these at the same time? And ultimately, like it can do both of those, and it can do it well. It can scale very well in both of those scenarios. You think about the blockchain itself and being able to, process transactions, have the security long term and all of those things, which is certainly there. And then Lightning comes in, and it is a means of actually really fulfilling the idea of Bitcoin as a means of payment and leveraging it as a payment rail, faster and cheaper than any other, network in the crypto ecosystem that you can transact value with. So it is very scalable, both from a scalable from the store value standpoint, as well as scalable from the medium of exchange. And I think that the Bitcoin layer one really helps in the store value aspect, and then the Bitcoin layer two, which is Lightning, really helps in that transaction side.
How can something be a medium of exchange if it's not a store of value, right? Like, it doesn't make sense to me. Like, before we have to collectively, that's my opinion at least, before we have to collectively agree, okay, it has value, great. So now how would we exchange it? It's part of the evolution, I guess, of an asset.
Yeah, I mean, definitely. And I think that there's people say that, like fiat is a store of value. It's just a bad one. Like, it's just one that is, inflation is decreasing over time. It's like, it has a lot of bad properties to it. So like fiat is one that, that does accomplish both of a store of value and a medium of exchange. It just does one of them really badly, and Bitcoin's the only one that does both of them, and it does both of them well.
Not long ago, I had kind of a debate on my channel, and it was Kaspa versus Bitcoin. Two parties, they exchange some thoughts. So what happens when, the last Bitcoin is going to get mined, and all sort of rabbit hole we felt into it. But I love Lightning Network. I use it daily, to be honest. Do you also agree that it's a layer built on top, but whoever participates into those nodes, they are not actually contributing to the layer one, if it makes sense?
Yeah, I think it's an interesting point, but I definitely like I guess disagree with the fact that it is it's harming Bitcoin in that okay those fees aren't going to the miners for sustainability and things like that. I mean with Lightning you still have to transact with the layer one to open and close channels to move funds in and out of Lightning, and it's not like we're gonna move all Bitcoin into Lightning and then no one's ever gonna go touch the layer one again. That's never going to be the case, and so there's always going to be Lightning using the layer one Bitcoin to go in and out of the network and ultimately settle up with counterparties. Like we're going to be touching the chain frequently, and so for that reason, anytime that goes in and out of Lightning, it pays those miners. So it does sustain them in that way. It still pays fees. It has all of those things. Additionally, like Lightning has, a lot of more unique properties of you can do things like a one set payment inside of Lightning, which are just totally uneconomical on layer one. You can't do that because of dust limits and the minimum transaction sizes that exist around dust. And so there's a whole set of like a kind of category of transaction that could never happen on layer one that also Lightning enables. And you have to pay that miner fee to create the channel to then be able to process those payments. So it's kind of opening up a new category that would have never existed on the layer one anyway. And so I think with like both of those, like being able to like, I think people think that when they think of like Lightning being off chain and like those fees not ultimately going to the miners, they do like, it's kind of like imagining that eventually all Bitcoin transactions will only be in Lightning. We're going to put, 20 million Bitcoin of the 21 million into Lightning and they're just going to stay there, never leave. That's not really going to be the case. People will still use the layer one cold storage, maybe like, billions of dollars in a single transaction, that kind of thing. And so people will still use the layer one and people will be coming in and out of Lightning consistently that still pays those miner fees. So I think it's like it's not a valid kind of criticism, I think, to think that Lightning is going to really harm miners ultimately, because it only helps them, and it gives users also the same way of transacting in these new categories, as well as when the chain's really congested, they can still get their smaller payments in there.
From my ignorant perspective, because I don't know much about Lightning Network in details, I mean, philosophically speaking, you could say it's evolving, right? This is the decentralized network. Like, how could you imagine that, this is not going to change, right? I mean, it's not changing per se because it's still 21 million, it's still decentralized, it's still divisible, transportable. Those are the properties at the core of the network, but of course there's going to be things built on top of it, right? So it would be like saying, oh, the email is not part of the internet because it's SMTP and it's not HTTP.
Yeah, I mean, I think that there's definitely like some validity there, and just like ultimately, like I think that that's also something that people fall into like a kind of a bad trap in, that thinking that the way that Lightning exists today is the way that it's always going to exist, or even Bitcoin layer one is going to always exist the same way. There's some properties that are going to stay there for sure, but it's like the ways that those two interact and like the long-term experience of them will evolve, like especially on like the Lightning layer and things beyond. Like there's a lot of protocol enhancements to still go inside of Lightning that we that are kind of known that people are working on and developing out. So like to think that something is stagnant in the way that it exists today is like a very ignorant way of thinking, just like the internet in those early days of like, okay, the way that you had to use email was you had to run your own SMTP server. Now we don't, no one does that, or not a lot of people do that. And so I think that just looking at the evolution of how these things evolve based on usage and the adoption, the same thing's going to happen here.
God knows where Bitcoin is going to be in 100 years from now. Like we are pulling forward an issue that is not even on the I mean, at least that's how I see it. I don't even think about it. So to me, it's more like a way to sell a coin saying, hey, Bitcoin has this problem that we don't even have, by the way, and we will face it in 150 years, but we have a solution. It's called whatever. In this case, was Caspa, whatever. But I'm sure there is going to be many more others trying to conquer the proof of work, which is, I thought it was fascinating. But yeah, thank you for giving me your perspective, because I was like, I don't get it. I don't see it as a problem.
Definitely. And it's still Bitcoin at the end of the day. And I think that that's something like you're correct in that a lot of people that have criticism about, Bitcoin on the energy usage or like the miner sustainability or Lightning and like all these things, they usually have an ulterior motive. They have some other thing that they're trying to push to, get more adoption of their own chain or their alternate Bitcoin layer 2 or whatever it is. And so most of the, you got to really take a lot of that with a grain of salt, because most of the time it's not even a real problem or a real issue that they're talking about. They just want this other thing, the other thing that they're making to be successful. And so, the way that is they try to attack Bitcoin. And so it's kind of, we've seen that for years and years and years now. So it's nothing new from the standpoint of people trying to kind of make up problems inside of Bitcoin.
I would like to know, of course, with Voltage, you guys have done so much work and development. Is there a pattern from someone, let's say a client who comes to you guys and they want to use the infrastructure. I'm sure there's going to be a percentage of people they maybe don't have much exposure in Bitcoin. Have you kind of found a pattern or some of the most common fears or misunderstanding they have when it comes to Bitcoin?
Yeah, I mean, definitely. I think that we have a lot of customers that fall into that category, as well as people that like are maybe familiar with Bitcoin, but they aren't familiar with Lightning. Like they kind of have never kind of crossed that bridge and really done the research on what Lightning is. And so there's, naturally a lot of questions, around like the security, like how does it work? What do we do in like X, Y, and Z kind of scenarios? And so it's, there's usually a lot of education that goes inside of those people. I see that's the vast majority of our client base. We have, I would say it's a diminishing amount of customers that already understand Lightning. They know exactly what it is, how it works. They just want to, get a provider, get an account, and then go. Most of them are like, we get demand from Lightning from our users, or we heard about it and we want to get the advantages of it, and we want to like understand what the opportunities are here. And so we do that's something we do a lot with our clients, is educate them on what is Lightning, how is it different than the Bitcoin layer one, because it is quite different from like the invoice mechanisms. It's not like just a static address. You get like with these one-time invoices and channels and all of these different things that are very unique to Lightning. And so educating on them on that. And then we also are doing more and more in kind of the fiat space, or like traditional fintech companies that maybe only do dollars. They've never touched Bitcoin at all, and we have more and more services to help them like kind of on off ramp from like US dollar into Bitcoin and so on. And so being able to help both explain Bitcoin, the network, and Lightning, all these things from kind of the lowest level. And most of these people are starting to use Bitcoin and Lightning for the kind of the rails to move the money. Maybe it goes from dollars into Bitcoin, gets transacted, then it goes from dollars to pesos or something else on the other side. Talking about how does that work? How does Bitcoin work, and why is it secure? And the best way of moving that value is something that just takes some education on. And most people are very receptive. It just takes kind of you got a lot of questions generally of like, is this really secure? Does this really work? And once you kind of break down those barriers and then show them the proof of actually transacting, sending these payments, doing all of these things, then it kind of the light bulb goes off for them of how impactful it can really be. We have customers that are settling payments in less than like half of a second, like close to a quarter of a second. And to be able to do that is like not really possible or sensible in pretty much any other system. And so to be able to show them that and them have the value is like really eye-opening for them.
Every time there is a new technology introduced, there is a learning curve, right? People have to go through.
Yeah.
Sometimes they just even fight against it, like internet itself. Like I remember the press was, oh, this is it's never going to work. It's too slow, and you can't use the phone at the same time. It's too expensive.
Yeah.
There is always like there's always some friction,
Yeah.
some friction in Bitcoin. We are at the same spot. I mean, I guess now it's been 16 years. If you don't know what it is, you're probably living under a rock. Maybe you don't understand exactly what it does, but I'm sure the name is going to ring a bell, right? And things are always the same. Oh, it consumes energy. Okay, but compared to what? I mean, banks are not consuming energy. Digging gold is not consuming energy. Moving gold, storing gold. How far do you think we are from kind of finding the Lightning Network specifically, because it's going to solve so many issues, maybe through allowing you to pay, I don't want to say Amazon because that would be a huge thing, but maybe kind of starting to propagate throughout, some platforms that deal with e-commerce, or seeing that button pay with sats or whatever. Are we 20 years away? Are we 6 months away? How do you feel about it?
What you said earlier is like definitely correct. And like, the evolution of technology, and we're like, I think just kind of coming out of like the broadband area where it was like, yeah, you can't use the phone and the internet at the same time. And it was really weird. And, people were like, oh, this is never going to work. Well, and then those problems got solved over time. And now here we are with the internet is like everywhere. The last year of Lightning has really been in more of that breakout moment. Have we seen some of the biggest exchanges in the world supporting Lightning? We have like Kraken, Coinbase, Binance, Bitfinex. Like the vast majority of these larger exchanges are either have support for Lightning or they're looking at it in the next 6 months. And so I think that has really spoken to the adoption coming. Where like first we're starting to really take over the crypto space. People that are doing, whether it's Bitcoin or any other altcoin or whatever it is, doing more volume on top of Lightning, adding it in and things like that. We're there. That's happening right now. And then looking, the kind of the next thing, next space out is more of that traditional, fintech companies starting to leverage it, and then ultimately going into like Amazon, Apple, Google, and that are these gigantic tech companies. I think that we are starting to see that evolution happen. There's people, there's larger companies that are in the kind of fintech space that are certainly looking at, Bitcoin and Lightning and how can we leverage it. Things like cross-border payments and all of those kind of things that like it really works just incredibly well for. it's like the existing system is also so incredibly bad at it. And so there's kind of like this big divide that can really, we can do a huge leap forward by leveraging, Bitcoin for some of these like cross-border use cases and whatnot. So, I mean, I think that that's coming. We see people actively looking at that now. And I think that, in the US, the new administration has been much more friendly from the government perspective than the previous one. And so that's really kind of bootstrapped more people being like, okay, now we can start to look at this more seriously. Now we can get our hands dirty, because before they were under fear of like being getting in trouble, in some way, shape, or form for actually like starting to integrate or test it or anything. Now it's like, okay, we can at least explore what's possible here. So that's coming. I don't want to put like a date on it of 6 months, a year, 5 years, but like we are starting to see those companies, like the fintech companies, looking at it now of like, how can we leverage this? What are our options? And I think that that's going to continue to evolve over the next several years. And really, those companies are historically slow to move, and that, something innovative is like great. They want to explore it, but then they want to roll it out in a very controlled way over time. But I think as soon as those start to happen, it starts to accelerate from there, where it's like, okay, as soon as, bank X does it, okay, now bank Y is going to do it, and so on and so forth. And it really kind of cascades down from there. So still take a little while to get to that full kind of broader adoption, but it's happening. That flywheel is in place.
You read my mind, because I wanted to ask you about, of course, the new administration pushing and changing things, like you said, because it's going to have an impact. Mm-hmm. I mean, Trump hasn't even done his first year, so it's super early days. I don't think he's priced in yet. I don't know if you agree.
Yeah, I mean, I agree. I think that we definitely have. I think that some of the like the hype, the hope of like, continued adoption, and a lot of these things that you just mentioned is, that's part of the reason why we went above 100,000 from the price perspective. But there's still a lot more to go, I believe, both from like, the price, but this adoption, and like it still feels early from like what is possible and what, is still yet to be done. Because like you said, we're just less than a year of this kind of new regime of being just less hostile to the crypto space in general. And so I think there's still a long way to go in positivity from being able to build out, new technology and, price appreciation, all of those different things. And I think that, people like Apple is like, it's you already see some like very, very small movements of like, I think that they allowed like, games on their app store to like incorporate Bitcoin, or like charge users. It was something around like allowing more kind of Bitcoin experiences inside of games in the app store. That's just that's just a small little tidbit of them like, starting to hint at like, okay, this isn't bad. Like we aren't against it. And then maybe, over time they start to inch closer and closer and closer. And so those are kind of the underappreciated, like, Bitcoin's not going to explode in price because Apple did that, but it's like these little things that are chipping away at this adoption that is going to just continue to happen over time.
It was 2023 when Bitcoin was trading at $16,000. Like, I mean, if you stop for a second and look what he has done in the span of a few years, the ETF alone, like BlackRock, has been the fastest in history. I discuss it sometimes on my podcast, and people are saying, oh, the ETF is not Bitcoin. I disagree. I think the ETF is a vehicle, is a channel for people to acquire whatever. Who am I to say, BlackRock, you can't buy Bitcoin? I mean, it's supposed to be a decentralized network. Like, how am I going to be choosing who participates? Well, then it's not decentralized, then it's fiat. We already have that. Like, the idea is to allow anyone to chip in if they want, right?
Yeah, no, I definitely agree. As soon as we start saying, Bitcoin's for everyone except for like those people over there or those people over there, it's like, well, we kind of lost the story of what we're trying to do here. A couple things like the ETF, like I think that it was the most successful launch of like an ETF to date. And I think that just shows there's demand. Like there is so much demand for Bitcoin that like, there's a lot of, organizations out there, whether it's hedge funds or, investment advisors, like all kinds of different organizations that were never allowed to like buy Bitcoin directly. They couldn't buy the asset itself, but they can buy the ETF. And so I think that is one of the reasons why it's so successful, is there's so much pent up demand that couldn't buy the asset directly that can buy, the ETFs. And like, yes, it's not like, true cold storage sats in your wallet, but like for those people, it is enough to get that exposure. And that's why we see it being so successful, is that there's just so much demand for it. And, the data is there. It shows that like that exists. And I think that will continue to exist, especially as like, another policy thing is like allowing things like Bitcoin and other assets to go into like 401ks in the US. And I think that continuing to like basically kind of normalize it as it's just another diversification mechanism for investment, whether you're like the hardcore Bitcoiner that is like, I want, 90% of my wealth in Bitcoin, Bitcoin, or you're just the average person that, hey, I want a 5% exposure. I just want something to start the flywheel of Bitcoin accumulation. And it's kind of the perfect vehicle to have that entry point. And hopefully it's the Trojan horse that ultimately gets people like, okay, I've had the ETF for a year. Now maybe I want to go and like actually buy like the real thing, look into self custody, look into like cold storage and things like that. And so, maybe that's not everybody, but I think that hopefully that continues to build that flywheel and get people more educated on it. And I think that's the biggest thing. People around the world want access to Bitcoin, and this is just another way of giving them access. And I think it's proven to be very successful.
There's going to be a conversion of someone who's gone into an ETF or whatever, maybe a treasury company or an investment into whatever it is connected to Bitcoin, and then down the road is going to convert into self-custody, into a metal plate into their garden with the seed phrase stamped into it. But I don't think it's for everybody. Like, I speak to a lot of people, and sometimes they say, I don't want I don't want the responsibility. Like, I want someone else to be accountable. And I'm okay in having a IOU in fiat. Hey, I respect that. Like, as long as you know, my problem will be whenever they will forbid me to have self-custody. If there is a market of people, they want to buy something, let them have it.
Yeah, I totally agree, and I think that is something that is also like one of the great parts about Bitcoin is you can choose how do you want to interact with it. Do you want to do the ETF version, or do you want like, okay, I want cold storage, I want my metal plate and all of those different things, and you can do both. You can do one, like one doesn't hurt the other, and so as long as we have the ability of always having the optionality of self custody, then like people should be able to choose like how they interact. And it's also like there's different different areas of the world even have very different options for like if you're in Africa, like you don't have the same financial system that we do in the US and all of these different things. And so it's really people got to figure out what makes sense for them in their place, like in the world, and what their current like financial situation is. And so the number one thing that we can do as an industry, as a community around Bitcoin, is just give optionality. The best thing we can do is just give them the different options for what makes sense for them. And I think prescribing of like you have to do it this way or that way is just so short sighted and just not really considering the world outside of what
100%. And of course, if they ask me and or you, I guess we will be more than happy to promote self-custody and cold storage.
Yeah.
But that's a preference, right? That's how we do it. It doesn't
Right.
mean that everyone has to follow. Do you think this new wave of investors, I guess I could say, is going to change the 4-year cycles? I mean, are we going to break it? What do you think?
Yeah, I mean, I'm not sure exactly. I'm still kind of figuring that out because, like, I mean, so far we've stuck to the cycle. I think that we are sticking to the cycle so far. But you are correct. I mean, like, there's the amount of like volumes, like BlackRock, like these Bitcoin treasury companies that are buying huge amounts of Bitcoin, like that. I think that it would be crazy for that not to have some kind of effect. I think ultimately, I think that it would, change things slightly in one way or another. I'm not sure exactly what that is, but I do think that like the paradigm of like how people have been like purchasing, holding, interacting with Bitcoin is changing, and it's changing kind of right now. And I think that will have some downstream effects into kind of the overall like market cycles and things like that. I think that there's some consistency, even when we think about like stock market and things like that. There's some flows, there's some consistencies that have been there for a while that will probably, maybe those two will mesh as we do more like ETF style instruments of being able to leverage Bitcoin, that maybe some like those two kind of merge and we have like a weird, like, it's not a 4-year cycle, but it's something that kind of like, follows the stock market sometimes of the years. And like, I don't know how that actually goes, but I think that we will probably see an evolution of the cycle's kind of morphing as we move along. I don't think that's happening right now. It seems like we're still in that kind of in the 4-year cycle. I think it'd be crazy with these new entrants buying so much Bitcoin that doesn't start to affect things one way or the other.
I didn't want to put you on the spot. Sorry. So I don't have a position on the matter. I talk about it a lot because I'm intrigued by not necessarily to understand where the price is going to go, because one Bitcoin equal one Bitcoin, right? I don't care. But it's more to understand how these beast is going to behave next, because we have indeed introduced new players, so the game is going to be different. And I know it's a meme, this cycle is different, but if you look at who has joined the network and who's participating, of course there's going to be profit taking, of course there's going to be corrections down the line. I don't believe we will see a 90% correction or even 70% correction for what it's worth. The gold behavior ever since the ETF was introduced has changed, right? Because you allow You have people like Michael Saylor, El Salvador. They don't care if these things pumps to 200,000. They're not going to sell.
I definitely see that of like if we have these increasing amounts of like large Bitcoin purchasing, and these people do kind of do what they say and they aren't going to sell, the supply is decreasing more and more and more, and then okay, like I think that has an effect in the market. It kind of has to at that large of a scale, and so like we'll see what kind of happens with that. But I think that we've seen over the last like year or so, Bitcoin volatility has been lower than normal. Not saying it's not volatile, it's still definitely volatile, but it's less like I remember the days when we would go 60% up and down and it was just wild, wild times. And we aren't seeing that. Not saying that it's never going to happen again, but like I think in the maturity standpoint, we have seen less volatility, relatively speaking. And I think that that's going to continue. Volatility is not going to go away entirely, but like as it matures, we're going to see more, I think, consistency overall.
I agree. And it's funny when I speak to people like you, like veterans or OGs, like if you look back into the price action for August alone, we corrected 12% and people are freaking out. Maybe lately they purchased at, I don't know, 120, 115, even 110, or even 100 for what it's worth. And this is their first bull market. And they're going, oh my God, 12% in less than a month. This thing is super scary. Dude, we've seen we've seen correction. This is nothing, right? So, and if you're coming from TradFi, of course, I mean, if you are a gold bug and you see 12% in 2 weeks, you're probably gonna vomit.
Oh yeah, I think that's the thing. Is all these kind of the new entrants are always super shocked about the volatility in these price movements. But like I mean I remember I think it's one of those things is just the longer you're in it, the more you just get used to it. And I'm like whatever, like it's gonna go up eventually, and like I'm good. Like I'm not trying. I mean as long as you're like I'm not like a short term trader. I don't try and I'm not trying to make a quick buck or anything like that. And so if you have that standpoint on kind of like more longer term investment, hey, just sit back and it's just like, it's going to drop a lot. It's going to go up a lot. It's going to drop a lot. But like over time, it consistently increases in value.
If you do have some cash, even some spare cash as a private investor or as a company, corporation, country, whatever you want to label it, if you do have some spare cash on the bank and you're looking at this and thinking, I mean, maybe 1%, not being exposed, you are literally shorting this thing.
I totally agree. And I think that's where, I mean, there's a lot of people out there that are kind of proponents of that, of like, look, you just do 1% allocation, 5%, whatever, just get started. And I think that's the best advice that people can have. Cause like, I mean, even, ignoring just Bitcoin as the asset, diversification is important. And I don't think there's anyone that really disagrees with that. Maybe there's, I'm sure there's some people out there that disagree with that, but like diversification is generally fairly good. And so, if you're looking at a bigger portfolio, like having some amount of allocation there is important. And I think that people are starting to wake up to that of like, hey, I want at least like something, I want some exposure here. And that goes back to, the value of like the ETFs and things like that, of like, depending on where your assets are, maybe that is more approachable than, direct Bitcoin purchasing.
I agree. And I think whoever doesn't understand diversification is because they don't have enough, because quote, enough could be a number which changes from person to person. But I am 100% certain that if you speak to anyone, Michael Saylor itself, like I'm sure he owns a house, I'm sure he owns stuff, you know what I mean? So when it comes to investment, there is no second best. I agree. But at some point when the pot is going to grow and that number could change from person to person, you would have to consider, okay, so what do I do now? Do I take a portion out and I buy something else? Do I treat myself with more time? I like to buy time, for example. I can see my wife longer because I don't have to go to work. You can decide the asset you want to acquire. It's up to you. And I agree. I think at some point when the pot is going to grow, that's going to be part of your thinking for sure. Anything in Voltage exciting you guys are working on?
Yeah, I mean, we're just continuing to push like the adoption of Lightning and being able to bring it into more parts of I guess the global kind of ecosystem, both in crypto and just general fintech. And so we've been continuing to do more in kind of the financial services realm. So not just that like Lightning connectivity, but also the things up the stack, the on-off ramping, the accounting, the compliance, like all those things that are required for further kind of larger scale adoption. And so those are the things that we've been continuing to work on, and we're excited about where the Lightning Network is headed over the next year to 2 years. We think that we're going to see some really large adoption really soon.
As always, guys, in the description you'll find Graham details and of course Voltage URL, so go and check it out. I really enjoyed our conversation. It's been an absolute blast. Really glad we've done it together.
Yeah, thanks a lot for having me on.
It's been a pleasure. And guys, thank you so much for watching. We'll see you on the next one.